Welcome, everyone. Thanks for joining us. Welcome. So we're going to get started in a few minutes, but we're just going to do some chat introductions. So while you're getting settled, feel free to introduce yourself with your name, your pronouns, and the location that you're calling from, including what native land you're on. And you can use that link if you're unsure. And just a reminder that this is a Zoom meeting, not a webinar. So you'll be able to see each other and you can talk in the chat. And just to make it easier, if you want to just see the presenters, you can navigate to the top right and click on speaker view. And we also have Huston, who is here, our Nc3 intern. You can let Huston know if you have any issues through the chat. All right, well, I'm gonna get started. I'll say for the Nc3 folks, a lot of the people here are from Nc3. So unless we get quite a few more participants, we might not want to do breakouts and just have a big group conversation. Yeah. Okay, great. So I will get started. I'm going to go on to the next slide here. So thank you so much for those of you who don't know me, although I think almost everyone in the room knows me, but I'm Mika Fisher, the Managing Director of Nc3. Thank you so much for joining us today. This is a discussion session and question and answer session, mostly about the Community Capital Toolbox. So I'm going to start with a land acknowledgement. I'm calling from New York City, which is part of the unceded land of the Lenape and Canarsie peoples. So we're meeting today on a virtual platform, but I always want to take time to acknowledge the importance of the land that we call home, particularly because we do the work of building local economies and stronger local economic systems. And none of that is possible without the past and ongoing stewardship of land by Native peoples here. So the mission of Nc3 is to educate, advocate, innovate, and promote the development of community capital. And what do we mean by that? Community capital is a set of strategies that allows people of any economic status to invest in their community. So I do want to remind everyone that we have a set of 4 community capital principles that we've developed as an organization. We state that community capital is inclusive, it's fair and equitable, it empowers and serves all stakeholders, and it facilitates shared prosperity. There's details about what we mean by those 4 principles on our website, and how Jen can post the link to that. But we don't have time to cover it in this webinar right now. The last thing I want to mention is that we are a membership organization. So if you're not already a member, I definitely encourage you to look into that, and how Jen can also post. We have a page that describes the benefits of membership on our website. So thank you so much for joining today. Just a bit of an overview of what we're doing here. We are going to review the Community Capital Toolbox for those who could not make it to the previous webinar in this series, which was kind of our big day to present that tool. And it's also a great place for anyone who needs a refresher. While I was prepping for this, I was in the last webinar, of course, and it really helped me process the information. So we're going to review, and then we're going to have some discussion, which I think we can do in a big room together. And then finally, the last portion is going to be Q&A with community capital experts in the room, of which we have many on our board. So I'm just going to dive into a review of the Community Capital Toolbox to situate ourselves. So this is something that we developed that is online on our website. Jen, once again, will post the link for that resource. Thank you so much. So the idea for this tool came out of a listening tour that some of you participated in. And this is where I heard from a lot of early stage groups who were really excited about the concept of community capital because they saw the potential power. But many didn't know where to start. They weren't sure what mechanism was the right fit. It was confusing to really get started. So as I want to remind you, we talk about community capital as a set of strategies because there's a lot of different tools in our toolbox to make that happen. It's not just one legal mechanism or one concept. It's really adaptable to the needs and resources within a community And we're here to kind of guide you to the right direction rather than prescribe how it's done. So within this resource, we've got two different sections of the guide. There's one for businesses or development projects that are trying to raise investment capital from their community or from their customers. And then there's a section for community builders, which is a person or a group of people that want to create more opportunities for community capital in their home. And I know a few of you on this call, I think, would fall into that community builder category. They're actually listed in the opposite order on the toolbox if you're looking at that, but for this review, we switched it. The other thing that it includes is an input meter. It's a 1 through 10 rough indicator of the time and resources each strategy takes. So that's often legal and marketing fees, and that helps you realistically strategize. So what I'm going to do now is give an overview of each tool, and then I'm going to show clips from the last webinar to give you a sense of what these look like in practice. You can always see the full webinar on our website, but this is going to kind of ground us with the same level of understanding so we can have a generative conversation. So our tools for businesses, your business or your development project, how do you go about this? How do you take in money or investment from your community? The first tool is rewards crowdfunding. It's not technically an investment. It's not a securities offering, but it is a good stepping stone to work towards that. These are donations from individuals in return for a product or service. The next, what many of us know, investment crowdfunding or regulation crowdfunding. This is a securities offering, and it's open to any investor via a regulated online platform. Then there's the umbrella term direct public offering. This refers to a few different types of securities offering, and these are all summarized in the toolbox, but the main kind of point of these is that they allow direct advertising, so it doesn't require a portal or intermediary. And then finally, we've got applying to a community investment fund. So this is an indirect way of soliciting community investment. But if there is a fund near you that has community investors, you can apply for a loan or an equity investment and be indirectly supported by your community through that. So I'm going to show a clip right now. This is to Piltz and Gomez of Honeycomb Credit. This is an example of investment crowdfunding. And I tried to choose a clip that really shows what the experience for an entrepreneur looks like, if that is you.
Let's talk a little bit about Honeycomb Credit. Could we go on to the next slide? So our mission is to unlock growth opportunities for small businesses to build vibrant, financially empowered communities. And the whole idea is that it is better for a local business to pay back Main Street, not Wall Street. I am in a room full of community capital folks, so I think we all agree with the power of this sentiment, not just in building local community wealth, but in helping entrepreneurs connect to supportive people in their community that can unlock all sorts of opportunities from them, from repeat business all the way up to connections that might be beneficial, like, for example, a lawyer relationship or an accounting relationship or a new vendor relationship. That is the power of community capital, and we try to realize that. Here's a little bit about the process. So when we are working with a business owner, we're asking them to submit an application, and we're taking a look at very similar things that a CDFI or a community bank might be looking at. We're taking a look at financial statements if they have them. We're also able to work with startup businesses. Personal credit plays a factor as well, a personal financial statement. And then we work with that business owner to create a term sheet that works both for them and for the community of investors. We then pair them up with a campaign coach that helps them organize a video shoot that is free, organize product photography, and give them week by week instruction on how to run an effective crowdfunding campaign.
Great. So that is an example, as I mentioned, of investment crowdfunding, and it can be kind of an involved process. And we have a few experts on crowdfunding in the room. So if you're considering one of those raises, you can ask about that process later on. So the next section of the toolbox is community builders. We have 3 examples. You're going to see real life examples of this afterwards. And I suspect some of you are in this category. So the first tool that we have here is investment clubs and networks. These are groups of investors who come together to learn, and sometimes they make local investing decisions together. There's a strong legal distinction between a club and a network, and other forms of kind of group investing. So do look to our guide for more information about that. The next thing we have on here is democratic microgranting. This is a tool that one of our board members has used to inspire and get her community thinking about making an investment together, or making decisions together. But this is technically not an investment. Like rewards crowdfunding, we use this as kind of a stepping stone on the way to a community investment. The next option is local investment web portals. These are websites or online communities that aggregate investing opportunities. This is a really wide-ranging tool, and there's a lot of examples that I have listed in the toolbox, and we're going to hear from one too. But I just want to note that this is not a regulated crowdfunding portal the way Honeycomb Credit is, although they often do link out to raises on established portals. And then finally, the tool that we talk about a lot here at NC3 is community investment funds. We have a series of resources on how to start these, but generally these are professionally managed funds that honor the principles of community capital. So this is a clip from Paul Bindle, who is discussing his experience with an investment club.
So Colorado Solidarity Fund is a investment club that is focused in Colorado and businesses that are based in Colorado. We have 63 members, and we each contribute between $20 and $350 a month to a common pot, and then we make decisions together about how to invest it. So this is a different kind of tool. I was telling Mika about it. Unlike some of the regulation CF, and obviously community investment funds and direct public offerings, this is a more grassroots approach, and that's what really resonated with us. Is we wanted a nimble tool that was able to we were able to respond to the needs of our communities in Colorado. So our members, range the gamut. There are lawyers in our group, and then there are teachers, there are caterers, huge class differences. We also are bilingual, so we have Spanish speakers and English speakers in our group. And our values that we're really committed to are collective power, equity, community, and inclusivity. And that plays out in our investments. Can we go to the next slide? So as I mentioned, we have 63 members. Those are the counties we're in. You can see we're still largely based in Metro Denver, so there's some need for greater outreach throughout the state. Our focus is really on worker cooperatives. So our focus is the solidarity economy. We want to see different kinds of businesses emerge in our state that specifically distribute wealth and power in more equitable ways. And for us, a worker cooperative is one of those really great tools that allows all of the workers to be owners if they so choose, and to take on an ownership position and purchase a share within the company so that they can benefit from any profits the company makes, as well as so they can participate in the strategic decision-making of the company. We've also invested in housing cooperatives, which allow more people to access housing. Our region is really beset by inaffordability. And so it's a huge problem for us that we're hoping that our investment club can solve. And to that end, we're even considering creating a spin-off club that would be focused on just real estate.
Great. And we have two more examples here of what it could look like on a community builder level. So this is Cherie Warwick from the 10K project, which is an example of that tool I called the online communities or online investment portals.
So the 10K project is the largest community of investors who actively fund Black-owned businesses. And I started it along with my co-founder out of frustration. I am a business plan writer. I've been one for 12 years now full-time. And I would write these business plans for all sorts of companies, people of different ethnicities, et cetera, all sorts of businesses, et cetera. And my Black founders were having trouble getting the funding that they were looking for. But within the Black community, we don't have a lot of accredited investors, but we have a lot of everyday average people who, if they knew that a business was raising money and they were able to hear what the pitch was, then they would be willing to put in $100, $200, $300, et cetera, in order to help fund that business. And that is what the 10K project is. It again came out of my frustration. I said, hey, everybody, let's get together and let's become this community of investors. So one of the interesting things that happens in equity crowdfunding or any kind of crowdfunding is that you have these different portals, but unless you go to each of the portals, you really cannot easily identify like the companies that you want to invest in based on whatever your social mission is. And for us, it is investing in Black businesses. So we have instead become the curator of the Black businesses that are on equity crowdfunding portals. And the way that we do that is through something called a Bet on Black pitch. So every Tuesday at 8 p.m. Eastern time, we host a Black entrepreneur who is raising funds through equity crowdfunding. They come, they present their business to us, and then our community has the opportunity to ask that business owner questions. And then each individual gets to decide if they want to invest in that business, and they go directly to the crowdfunding portal in order to do the investment. So we're not a fund. We just bring together the crowd of people who are interested in investing in Black businesses and the Black entrepreneurs that are looking for the crowds. So we bring those people together. We marry the two.
Great. I love how clearly Cherie demonstrates that kind of community building work that's happening. The last tool we want to discuss is a community investment fund. So this is Tash Wynn, who's the board chair of the Community Investment Fund in the East Bay. You'll hear more.
The Real People's Fund stands for Revolutionizing Our Economy for All Local Peoples. And we are a democratically controlled fund and program for BIPOC entrepreneurs and small businesses in the East Bay. And so our goal is to build economic and political power while also providing expanding opportunity for Black, Indigenous, and entrepreneurs of color. And so we do that. And so these are the groups of people these are the organizations that govern this fund. It includes organizations that work for Asian Pacific Islander empowerment, organizations working on just transition, organizations working on equitable housing development, tenants' rights, restaurant rights. I work on healing justice. And we partner with Runway, where Larica works, and Optima, and they provide culturally relevant and holistic support to small businesses to make sure we set folks up for success. We are partnered by a foundation, the East Bay Community Foundation, who helps us do fundraising. And we work with Community Vision. They are a CDFI who helps us administer the loans. And we are completely democratically governed. So this means that this group of people that you see here, these organizations, are the board. We make decisions. We also have committees that we work on outside of our board meetings to kind of keep the work moving. So we've got a fundraising committee. We have a mission criteria committee that identifies what the business's impacts objectives are and assesses values alignment. We have a committee that's just focused on political empowerment and political education. We have credit committees that are reflective of people in our community. And we really work on a each one teach one kind of value orientation. So we teach each other about how we want to be governing, and we really move at the speed of trust. Next slide. Cool. So this is kind of how we work. We are more than just a fund. We are a program. And we know that, in addition to providing accessible capital, we also have to set folks up for success by offering free business advising, technical assistance, and support that Lorica and our folks at Optima help provide. And then we know that in order for businesses to organize, they have to have the time and resources to learn and to do it, and they want to do it. And so we create space support circles, offer folks to share their pain points, what they're struggling with, and also teach them about what's going on politically.
Great. Next slide. There we go. So that is a bit of kind of taste of pieces of the toolbox, some real life examples to help you thinking about how to apply this in your own community. So we're going to do 2 breakouts. I actually did some behind the scenes here. We are going to go into breakouts because a few more people joined. And the first breakout is really to process this information. We want to talk about what community capital strategies or tools were familiar to you, which ones were new to you, and if any questions are coming up about them. That's going to be for 5 minutes, and then we will come back and report back to the main room. It won't be a formal, you don't have to summarize what happened, but just bring out main points. So if you want someone to take notes and that's easier, self-select a note taker in the group. So Hao-Tian, I think, has the breakout rooms ready. Is that right? Yep. Okay.
Yeah, I can start it now.
Great. You can start the now. Hello, welcome back, everyone. We all are. All right. So I'm just going to open up the room to anyone who wants to, share what happened in their breakout room. We only have 2, so we can, this part doesn't have to take too long. But yeah, I'm curious to hear what was familiar to everyone and what was new.
Well, I guess I'll jump in. In our breakout room, I think we were all pretty familiar with all of the tools discussed in the first part of the program. We mostly went around and talked about what each of us did, and we learned about a terrific organization in Brooklyn, New York called Common Good. But yeah, I don't think any of us in our breakout room were unfamiliar with any of the tools discussed so far.
Okay, cool. How about the other breakout room?
Go ahead and report back. There were a lot of really good, I think, takeaways and insights from our group. One participant said that that it was helpful as they're learning about community capital, not only learning about for themselves, but also how to communicate it to others. So really appreciated the framework of the toolbox. Another person said that they're familiar mostly with rewards crowdfunding, and so we're interested to learn more about the other ways and how to go beyond that. We had a takeaway of always being interested in community investment funds and how they can work collaboratively with others. And then there was also a takeaway about Paul's investment club and being impressed by how the size it has grown to. They have 65 members, which is pretty large for investment club. So wanting to learn more about that particular club and maybe seeing it as a model.
Sure. Thanks. I love that idea that this can also help not just new folks come into the fold and understand community capital better, but can also be kind of a train the trainer tool. So you can show this to anyone. If you're excited about community capital, definitely pass it along and use it as a teaching tool in your own way. I have a comment from Christine. Please share more about Common Good. I've talked with Michael a little bit about it. So if you want to share, Michael, your model, I know it's exciting and probably best described in your words.
Thanks. I am happy to share, and I hope that at some point in the near future, we can be in shared space and time and maybe break out of our virtual box a little bit. Common Good is actually a platform. So it's important to think of us as a nonprofit or NGO fintech. And we do a number of things on that platform that essentially liberates community developers activists and organizers, as well as individual community businesses or municipalities working on sustainability projects or localizing projects. We offer them a set of tools that are really a la carte. And the way that they participate is that they have to commit to supporting the larger network, not just their individual agenda. And you get to actually build your opportunity to use the resources of the network by doing what you do every day. So for example, vendors accept common good as a payment system, and it saves them credit card fees. And what they save actually goes into a common pool of funds that are then allocated to community projects. Some people use common good as a platform for mutual aid. And so what they do is they use it as a mutual aid exchange system, or they exchange value in other ways like time banking. Some people use common good as a way to manage gifted funds that are then allocated as either low or no interest loans or as support for community defined and designed projects. It could be a playground, or it could be a community owned solar system on a food co-op. And so the goal is to have a gateway both onto or into and out of the mainstream economy. So we operate with local banks. We do ACHs transparently, bank transfers in the background. And there's also the issue of compliance. As you know, state to state, it can be a bit of an obstacle course in terms of what you're allowed to do and not allowed to do, and whether or not you raise the ire of the local state attorney general. And so this goal of how people can remain in compliance without having to bend themselves into a pretzel for each given situation, especially if they span across state lines, is one of the things that we wanted to put in place and that we're continuing to evolve. So some people think of common good as a local currency. Other people use it as a local buying card or buyer's club. Others still use it as a fund management strategy, but it's actually a collection of tools that's a part of a digital platform, and it is not for profit, it's for people. That's sort of a synopsis, but I'd be happy to connect people with more details at another time. I'm really just here to sort of connect with the wisdom in the room. So I'd rather not hear my own voice, to be honest with you, but thanks for making the space.
Yeah, of course. Thank you so much for sharing, Michael. And Michael's contact is in the chat if anyone wants to reach out. I'm going to move us along to the next portion of this discussion, which is a longer breakout, 10 minutes, that's about how this applies to your community. So I'm curious to hear from all of you. How could you see these strategies working in your community? What's most alive to you right now? Do you have any questions for the community capital experts in the room? Because we're going to head into a Q&A. And then what's the next step you can take to implement these ideas in your community? And this could be a project that you're currently working on. It's a project that's new to you. It's something that you think is missing in your community. This can go in a lot of directions. So we are going to send you back out again, and I will broadcast that series of questions to you. Welcome back, everyone. You all took the last 60 seconds, so I'm taking that as a sign that you wanted to keep talking. That's great. Yeah, who wants to share from their breakout room?
I welcome someone else from my group to do the report back. I will if I need to, but welcome others.
Sure. I think one of the main takeaways from our breakout session was the value of community organizing, and how maybe before we start using these fundraising tools, that that we actually focus on community organizing, because that's such an important part of that, and being able to build relationships with people in the community. And then that obviously makes it easier to start to use these tools in the toolkit to actually raise funds. That's what I heard. I hope I did a good job.
That's a really great point. Yeah, it makes me think that some of the folks I've talked to in the space who have the most successful, in my mind, community capital projects didn't just come out of nowhere. You know, they're working with longstanding business associations or longstanding activist groups or tenants groups. You know, and it's a lot of people who are organizers in other ways, realizing that there was that financial piece that was missing, and a community capital tool is being used to kind of pull that financial lever rather than be the only piece of change. How about the other group? Oh, Brian, if you're sharing, you're muted.
Oh, sorry about that. We talked about various ideas that our organizations are working on, and so Michael talked about community, investment clubs and sort of how they break down the market for investment clubs, which is really interesting. And Ken talked a little bit about the opportunity for muni bond funds, given that that's often how smaller communities can raise capital, and a lot of money moves around via muni bonds. And I talked about a project here in Concord, California, that would develop a community investment fund through a blended strategy of having an entity that owns real estate and then uses that as ballast to also make investments into small businesses, and doing that, all of that with capital raised from the community via probably regulation crowdfunding, but we haven't gotten as far as actually doing an offering yet. So interesting ideas out there.
Any other reflections before we move into the question and answer section?
I have a quick reflection if there's time for that.
Yeah, absolutely.
I wanted to underscore, I'm not quite sure who was speaking. My apologies that I'm a little blind to some of the dynamics today, but I'd rather participate than not. About the notion of building on a foundation of organizing. One of the things that we at Common Good have come to realize, that even though we have the digital technologies, the silicon technologies, the servers and the code, the truth is that without the social technologies and without the values, vision, and mission alignment, you really find yourself ill prepared to be able to, one, be consistent in terms of aggregating the common good, if I can use that term, and two, the issue of not just confidence and competence, but the actual trust that's necessary. The trust that's necessary to challenge the sort of predatory and extractive status quo of the way economies are structured right now. And so I wanted to underscore that with a request, and that is how we might think about together about education that recognizes that people are sometimes in a mental space where they don't see an alternative. And so how can we participate in popular or local education in a way where people see themselves as a part of a new possibility? And in addition to the education, that it's incremental. So people don't see it as an all or nothing, but there's an on-ramp into the solidarity economy, for lack of a better term, or a gradual off-ramp from a predatory or extractive economy. So those two things, the idea of education and a kind of incrementalism, meeting people where they're at. If people can sleep or dream or think on that and feed it back into the circle later, I'd be really grateful, because that's some of the work that we're struggling with, Jack.
Yeah, I think that's really important. A group that comes to mind in New York City that I think keeps that at the core of their programming is the Bronx Cooperative Development Initiative. I know they do a lot of popular education and work around just helping people kind of step back and take a look at the system as a whole before proposing any changes or radical solutions. But I think that they're trying to pair them together. And I'm actually talking with some folks there about using something like an investment club in conjunction with popular education and how that might be a tool for action after that kind of bigger picture education happens. Any other reflections? No. Great. Well, we have time for a question and answer. This webinar is scheduled to go until 2:10, but since we're a small group, we can play it by ear. And our community capital experts in the room are Brian, Cameron, Chris, Bill, and Janice. However, I think all of you are experts in your own way. So this is a bit of a experts in many different fields all hanging out together. But those are the folks who came on board to answer questions specifically. And we've got, just to give some background about the types of questions, two of the folks in the room, Cameron and Brian, are attorneys. They're able to give general legal information, but not answer specific legal questions about your project. Bill is an expert in crowdfunding and has helped to bring a bunch of entrepreneurs into a place where they can do successful crowdfunding campaigns. Janice has helped provide expertise and technical expertise around community investment funds to lots of projects. Who will have to jump off soon, so ask those questions first. And then Chris is our board chair, all around expert, has seen this happening for years, and you can ask general community capital questions, Chris. So I will open the floor. I'll give it a little bit longer before I ask them with my questions. Okay, great question. Pitfalls of community investment funds for Michael. Janice is like, wow, I want to hear your take on this, Janice, before you have to leave.
Oh, where to begin? The biggest one being the barriers created by the regulatory environment that I will let Brian address more in depth. Right now, unfortunately, the vision of kind of a community mutual fund is exceedingly difficult because of the U.S. regulatory environment. Beyond that, I think, once we get past those barriers, the other, I wouldn't call them pitfalls, but watch outs perhaps, is, that you are opening up a new opportunity to people who have probably never participated in this kind of direct local investing. So there will need to be a lot of education and, just cultivation of community members to get them interested in this. But I don't think it's hard, but just, something that will need to be done. And then, you'll also need to do kind of similar cultivation on the business owner side. This is another, I don't want to call it a pitfall, but a challenge perhaps, that there are still a lot of businesses out there, business owners, entrepreneurs, who don't necessarily see the benefits of community capital. They're still kind of the mindset of, well, if I need this much money, it would be so much easier if I could just find one person to write me that big check. So either I'm going to go to the bank and get a loan, or maybe I'll try to find, that angel investor to write that big check. So, we still need to help business owners understand the power of community capital, the benefits, the opportunities that Bill can really speak to on that front. But that bias from the business owners is still out there. I encounter it every day. They need help understanding the power of community capital.
Thanks so much, Janice. Brian, do you want to share anything else about those regulations?
Yeah, so right. So as Janice said, that's the regulatory landscape is definitely one major challenge, because people often come to us and say, here's a fund we want to build, and can you help us do this? And sometimes the short answer is no, you can't do that. But here's something you can do. So I always like to follow up a no with a yes. And as we talk about in that community investment fund handbook, and I won't go through all of it, but the bottom line is the 1940 Investment Company Act does impose a lot of regulations on the kinds of funds that can be built. You can't just build any kind of a fund that you think your community needs. It has to fit into one of certain models or categories, or fit into one of specific exemptions, to be specific. And so, for example, there is an exemption for a real estate fund. There you go. You can form a community real estate fund that offers your community an opportunity to own real estate via this fund, give people a chance to own a community asset, even people who have never owned a community asset before. And so that's a very promising strategy that probably is way underutilized. You can build a loan fund. So a charitable loan fund, if it's organized as a 501c3, it's exempt from the 1940 Act. And so there's a lot of those. They can make business, loans to local businesses, raise capital via debt offering. Now, if you wanted to make build a fund that makes it, equity investments in local businesses, kind of a local venture capital fund, as it were, that's where we run into challenges, because there is no simple and tidy exemption that allows you to do that. So that's when we have to get creative. And that project I mentioned that I'm working on in Concord here in California is one way of approaching that, sort of doing a blended fund that has both real estate and equity investments in businesses. But so that's one way to do it. And there are other approaches to sort of get to the same outcome. But the point there is you do have to find a specific strategy. You can't just do whatever you want. So that's, to reiterate Janice's point, that's definitely one of the big challenges with community investment funds. Not to mention, these other things that Janice alluded to, like, the problem that, sort of the cultural issue that people don't understand why you would do this. They don't understand why you want to do anything outside the conventional, Wall Street investing. There's that, the cultural problems around the non-wealthy people not seeing themselves as investors and not seeing themselves as qualified to invest, even though we should all be investors. But yeah, there definitely are cultural factors that present some kind of friction to getting this done. People just don't understand it, or don't know that it's possible, or really believe that it's not possible to do what you're talking about. These are all challenges.
And even though I'm not the expert in this, and I have to defer continuously to the other experts on the thing, one of the pieces that we've talked about broadly in NC3 is for non-accredited investors, community investment funds are not a way to build wealth largely. And so that's, from our perspective, that's problematic and a significant challenge with the existing structure, which is why we have proposed a new community investment fund structure, both to the Securities and Exchange Commission and to the Senate Banking Committee. So
We also have a question. It looks like Janice might need to head out.
Yeah, I just saw Cameron's question,
Yeah.
and I'll try to speak to that quickly. I think it's a great question, Cameron, on the long-term viability of community investment funds. I think my kind of crystal ball prediction on it is that what will be most challenging once we are able to get these set up and running will be finding appropriate deal flow, finding enough deals to invest in. I think, just from my experience with investment crowdfunding, that the interest on the investor side to invest in local businesses is more readily developed, a little bit further along perhaps, than the entrepreneur and business owner side that I was mentioning before. So I think that's something that we just have to be aware of, and plan into the running of the fund. How many deals does it take to make this deal, make the fund effective and worth running? the other part of your question, if it's difficult to find mission-aligned finance people, the answer happily is it's getting less and less challenging. I'm running out, I make a joke, I run across a lot of people who call themselves recovering investment bankers, which I always say, it's like, that's great. We need more investment bankers to go into recovery. And depending on how long they were investment bankers, it might take them longer to recover and unlearn what they have learned from the traditional systems that they're in. With that being said, there are more and more qualified people coming directly into community capital, or more directly into community capital and mission-aligned finance, not necessarily from traditional investment banking. That's what I think is the most exciting development, seeing folks that come in with financial acumen and the mission. That's all we need. We don't necessarily need folks to be coming from Wall Street to do this. In fact, we don't want them so much because like it takes them too long to unlearn these old systems. Folks that are coming in with that financial acumen and the mission, they get it and they're creative. We need more of these creative financial minds, and I'm seeing a lot more of them. And with that, I do have to hop. So
Great. Thank you so much.
Janice.
Thank you, Janice.
Great to see all of
later.
you. Bye.
I'll do a quick NC3 resource plug, which is that we're working on building a technical assistance directory for exactly that, mission-aligned, values-driven advisors who can do things like advising on the financial aspect of funds or other projects. So we're in the process of building it. And if you know anyone who might want to join, please send them that link that I just put in the chat. Any other questions?
I'd like to know what Jen is up to.
Yeah, let's hear about what Jen is up to. That's a great question.
Jen was clicking on the link, so I was like, wait, yeah, so the local crowd that our region subscribes to is trying to transition into a cooperative. So that's where some of our focus, we have a small transition team, so that the idea would be that not just some of the 5% that the campaign teams have to pay to the local crowd, 3.5% of that comes back to our community, and then we can kind of reinvest it, mostly just in paying for next year. But hopefully as we ramp up after COVID kind of hit us down a bit, then we could maybe do more for outreach and things like that. But it's been a struggle, but it's also been positive. You know, we've been doing this for 5 years. We're just about ready to launch our 50th campaign. So just being a small little region, the fact that doing it on this really hyper local level, there's a lot of synergy there. There's a lot of building the ecosystem, but there's also a lot of disconnect between, you know, people looking for angel investors and revolving loan funds and seeing the value of working with us as well. Because, you know, we have business advisors that are working with us, but it's still, because it's not, when it was brand new, everybody wanted to collaborate with us, like all the economic development groups, but then, you know, something else was shiny. So now it's just me and a couple people. So it's just trying to find a way that will have the people power, will have the resources, which we're getting close. And then how do we make it so more of that financial aspect goes back to the communities instead of going away to a one entity that's running the local crowd. So that's what we're grappling right now. So hoping to make that transition so that more communities, because right now we only have 6 that are participating, but making sure that other communities that want to dive into rewards-based crowdfunding can get the technical assistance and the support they need to launch that.
Well, congrats on 50 campaigns. That's pretty impressive, John.
Thanks.
Any other questions before we wrap up? Got hybrid and or customized municipal bond scenarios. What's the range of adaptability? Brian or Cameron, maybe you have some insights on the muni bond scene.
I don't. Gonna have to.
Well, yeah, maybe maybe Michael, could you talk a little bit more about sort of what you have in mind there in terms of, do you mean adaptability in terms of how the money can be used, or what? Can you say more about what's on your mind there?
There are some pretty established models. I'm fairly clueless about the ins and outs because I don't have any experience. But what's clear to me from what little I know, or maybe I should just say, speaking from my vast ignorance, it seems there need to be some changes, that there need to be some adjustments to the model, especially because we have an emphasis on specific aspects of accountability and transparency, specific aspects of being able to do things across certain borders between municipalities. Well, one of the specific things is that some of the work that we're doing is focusing on bioregions, and that when put together partners, sometimes that can complicate how an offering might be made or whether or not it's certain parameters. So the truth is that I'm trying to both figure out the boundaries and see what's possible in adapting those boundaries at the same time. It's something that I'm very ignorant on. I can understand if this isn't the right forum or enough time to sort of unpack that.
Yeah, and I don't have a lot of expertise in muni bonds either, but I would say this, that is one of those tried and true capital raising mechanisms that has gotten a lot of traction, so much traction that seems to be almost a default way of doing things. And private organizations can potentially use muni bonds, but through a sort of indirect way. Of course, a muni bond has to be issued by a municipality, by a government agency, and then they can take that money and lend it on to a private project to do something that has some connection with government work or public facilities or something. And there's nothing wrong with that. It can be very effective. There are huge transaction costs associated with them. We don't do any work with muni bonds. There are law firms that really focus on that, and we don't want to get into that space. We focus on helping organizations raise capital directly, whether through crowdfunding or direct public offerings or something, not through a government, municipality. So I guess the short answer is I don't really know that much about it, so I'm not sure I could be helpful. But I would just say there are other options, and for private types of uses of capital, other options may actually be better than muni bonds. I guess maybe I'll leave it there because I don't, like I said, this is not my area of expertise.
Thank you, Brian. I'm actually going to close us out because I've got a few people who have to jump off to other meetings. We're 2 minutes over, but thank you all so much for joining and sharing your expertise and participating in these breakouts. We do have an impact survey we're asking our webinar attendees to fill out. So Houghton is going to post that in the chat now. We would be very grateful if you fill that out. It takes 2 minutes. And we have one final webinar in this series. It's called the Nc3 Resource Showcase. It's basically looking at our collection of tools that's spread out across 2 sites that we manage. And we're going to demonstrate how and why you might use those towards building a community capital project. So hopefully that will help kickstart your projects. And that's the registration for that. Thank you so much for joining, everyone.
Thank you all.
Thanks,
Bye.
everyone. Thanks, Mika.
Take care.
Yeah.
Thanks.